Um, in terms of, let's just go a little off topic over here. We're on TradingView. We're presenting over here. What would be some tips with regards to setting up your charts? What are some indicators you like using? Things like that. Start with you, Raghee.
I'm a huge TradingView fan. I've been using TradingView. Actually, I have it up on my screen right now. I've been using TradingView because a lot of the Forex brokers that I was with started moving their charts over to TradingView. I thought, what is this? And then when I was trading crypto, that was the main way that I would track crypto. So I've just now started to incorporate it more and more. The Pine Editor is actually very easy to work with. I've got a number of tools that I've scripted in Pine Editor or have people scripting Pine Editor. So I'm a huge fan. And then if I want to trade, now with the back end where I can link it to my Alanda account or TradeStation or even Alpaca, I love it. So actually within TradingView, I have the grab candles, those color-coded candles. They're available free within the platform. And if people click on the indicators button on the top of the TradingView platform and just type in GRAB candles, you'll probably get 3 or 4 versions of them because I've always made the calculation, the formula for them freely available. So that's on there. The 34 EMAs that I use, those will usually come with the grab candle indicator. Another tool that I really like using on TradingView is the volume profile along the side. I'm not interested in volume on a particular date unless it's well below the average. I love the vertical volume. So if no one's ever tried the volume profile, they've got the built-in volume profile. Big fan of that. The variable range volume profile, I love putting that on my TradingView charts. And Darvis, I put Darvis levels. We've got a free version of Darvis. If you search simpler in the TradingView platform, you'll see all the free tools. There's 3 of them that don't have the lock next to them. I would use Darvis, love the volume profile, and throw the grab candles on there. And even members who are using TradingView free, it should keep you under that 3 indicator threshold. But huge fan. I've been a pro, whatever that pro echelon level is, for many, many years. I could write poetry to TradingView.
Well, what's your handle in case anybody wants to reach out over TradingView?
It's Raghee Horner. I'm Raghee Horner on everything. If it's not Raghee Horner, it's some scammer pretending to be me, sadly. But yeah, it's just Raghee Horner.
Sweet. And when someone looks at the volume, I guess indicators, how would they read those, and what would they kind of take out of those?
Sure. So, my approach is a 4-factor approach. I mean, most people look at price and they end there. So what do I mean by that? Open, high, low, close. But then think about the indicators that we're using. They're typically based on some calculation of open, high, low, close. So we end up looking at price and then price-based indicators, when in fact we should look at time, we should look at volume, and we should look at volatility. So the volatility factor is a little more difficult to discern, but the volume is very easy. So what you want to do if you're going to use, say, a combination of price and volume is use whatever price tools you like, but make sure you're implementing a volume weighted average price and or something like those volume profile levels that are built in to the platform, and look at where the size is. I mean, that's really it. Look at where the size is. It's just that simple. I look at it as that sub-market. So I'm sure many of you out there have seen pictures of the like an iceberg or a glacier, and they show what is shown above the surface of the water and then the mass that's underneath the water. To me, that's volume. So you see a little bit at price, and it's good to know the iceberg is there, but when you look underwater, sort of sub the surface, you see a lot more. So look at where those volume levels are clumped up, and you're going to notice just how much those levels are defended and reacted to. And oftentimes they're not going to be obvious price levels at all. So when you overlay the two, I think you immediately start to see things that the broader markets are completely oblivious to.